Banks worldwide continue to get reach-arounds like we've never seen before in history. Is there new evidence that suggests the biggest reach-around of all time is much closer than anyone suspects? With it now being 2 weeks since the banking crisis really, truly kicked off, the price of Bitcoin has gone up a couple $1,000s, and banks see no sign of relief in the near-term future whatsoever. In fact, we're seeing the exact opposite. And how will this play into Bitcoin's price? So breaking within the last few hours, Yellen is convening with top regulators for a Friday FSOC meeting amidst the banking crisis. This is something that totally happens if everything is going well, right? No. This only happens when, potentially we're on the verge of something very big. And when I say very big, I mean very big and very bad as well. And to throw everything even further, Jim Cramer saying Deutsche Bank is fine and very wealthy. Brace for impact. Obviously, this is not good news. Whenever Jim Cramer comes on and slurps and gurps a product or an asset or a stock or a bank, it's always bad news for that asset, for that bank. Truly, the hit rate is absolutely astounding. And not to mention, I have a lot of things we're going to continue jumping into here before we look at the Bitcoin chart. But the bond market is clearly already pricing in that the Fed is most likely done hiking rates, not because it doesn't want to, but because it doesn't have the option to anymore. And the futures market is pricing in rate cuts as early as May and June. This is very big. You can see that here, the market expectations for the federal funds rate, you can see in June topping out a little under 5% and then kind of just inching and squinching down to a little over 2% by the beginning of 2025. Those are current market expectations for the path of the federal funds rate. Basically meaning the market does not believe Jerome Powell, because what Jerome Powell said just 2 days ago was that they don't see rate cuts this year. Fed Chair Powell said 2 days ago that the Fed does not see any rate cuts happening in the year of 2023, which there is roughly 9 months left. And the market doesn't believe him. And you can see that the market is expecting they won't have a choice but to pause and then also start cutting rates. With Nouriel Roubini saying that the economy is headed into a Bermuda Triangle of risk that will bring on a crisis to rival 2008. Myself and many people as well believe, based on everything we're seeing and the reason that we're heading into this crisis, as much bigger and potentially much more detrimental than 2008. However, I'm not panicking about it because, again, we have an option that we did not have back when I was 1 year old in 2008. That reminds me, I just celebrated my 6th birthday just a few days ago. So that's really big for me as well. I was actually negative 5 years old in the 2008 crisis. But the amount of Bitcoin supply that has not moved in the last 2 years is exploding. And you can see that highlighted here with this yellow line, making new all-time highs day after day, just completely going parabolic. A lot of people are invested and for the long term. These are 2+ year active addresses. I know that I have addresses in this camp as well, right? I have addresses that have been holding Bitcoin for more than 2 years. People holding for longer, and I don't see that changing really anytime soon here. But again, I want to highlight this. The stock market is trying to convince itself things are okay, and investors are seeking safety in companies with fortress balance sheets. But we have to understand the fact that half of my timeline is officials and government employees and politicians or people working with the Fed saying everything's fine. That is the biggest red flag that everything is not fine. They said the same thing back in 2008 when I was negative 30 years old. And I think nothing has changed right now, right? If we're truly on the verge of a banking crisis, if we're truly on the verge of something very big, what do you think people in power that don't want something bad to happen, or at least trying to slow it or prevent it from happening, what will they say? Will they say, holy baloney, everything's about to collapse? No. They'll say things like, everything's fine, guys, relax. They want to prevent more bank runs. But I don't think anyone's believing them, and nobody should believe them. That's the number one thing I think most people have already agreed on, is that nobody really believes these people. But in the last month, we've seen Silvergate, Silicon Valley Bank, Signature Bank, First Republic, Credit Suisse, and now potentially Deutsche Bank as well getting completely dumped on. And again, another trend I just don't really see changing anytime soon. And now 31% of global investors see a systemic credit event is the biggest risk for these markets, which was only 8% last month. Now it's 31%. Inflation was 25% this time, and it was 40% last time. So inflation was like the thing people were saying is the biggest risk. But now That's not what they're saying anymore. Now, very quickly, in a very short amount of time, now they're saying a systemic credit event or banks collapsing is the biggest risk. And that's obvious. We see a massive percent jump there. And again, it happens very quick. So just imagine where we'll be next month. I can only imagine what will happen. I mean, if you've been following the news every single day, it's been either another bank in trouble and something very big, gigantic amounts of news. What is going to happen within the next 4 weeks? I can only imagine. It's going to be absolutely insane. And Deutsche Bank stock is down. It was down massively today, over 14% at one point. It's not currently, however, but it has over $500 million in deposits. And it is wobbling. It's Germany's biggest bank, and it's in the top 10 biggest banks in Europe as well. So these are not small banks that are getting crushed here. And again, complete 180 with the federal funds futures. Cuts are basically only thing on the menu according to what these markets are pricing it. They don't really see an option. And again, if we fast forward to the next FOMC meeting, if Powell actually would raise rates another 25 basis points, I would be shocked. I just don't think that's an option at this point. I think they barely squeaked out a 25 basis point hike this time. And these rate hikes, their true effects on everything take an estimated 6 to 18 months roughly to be fully realized. So most of these rate hikes haven't even been fully realized yet in terms of how it's going to affect everything. There is a delay. Just because you raise the rates 25 basis points doesn't mean everything sees the effects right away. No, it takes time. Think of it like this way. If you're in a public pool and you pee yourself, right? If you pee in a public pool, not everybody in the pool knows you peed right away. It takes time. You pee, and then potentially you start to see a little bit of yellow float to the surface, and you start to think, oh, geez, I hope nobody's seeing this. Let alone smelling it, right? Depending on what you ate, if you ate like asparagus or something. And then, maybe a minute or two goes by and you think, oh my gosh, I really ended up peeing a little bit more than I thought I peed. And there's pee everywhere. And next thing you know, people are screaming, they're yelling, get out of the pool, get out of the pool. There's pee everywhere. And that's exactly like what's happening right now. It takes time for people to realize that there's pee in the pool. And the German Chancellor Olaf Scholz, Deutsche Bank is very profitable. There is no reason for concern. And the credit default swap market, they disagreed, right? Credit default swaps disagreed with this. And very much so. That's why this panic this morning happened with Credit Suisse, basically. And again, when we have everyone coming out and saying, hey guys, everything's fine, don't believe them. Because why? When have they ever lied to us? You can go back and Google if they've ever lied to us, but it's very clear, I think. But right now, the price of Bitcoin is not really much different from yesterday. We saw a pretty wide swing over the last 48 hours with Bitcoin going all the way down to 26,500, up again to above 28,000. So it is kind of just bouncing up in this upper range though. But specifically, Bitcoin is in the bone zone, formerly known as the crunch zone, which was formerly then also known as the bone zone, and it is now known as the bone zone. And that is in this very low volume area, aside from the 30K level, which is right here, very low volume area between 32.5 and 25,000 USD. And anything can happen in this zone. The pressure to the upside, there's a very high chance we at least tap on 30, especially as this banking crisis continues. Bitcoin is still within the midst of a macro breakout. The stock market is actually still kind of holding on this trend, which I'm a little surprised by. And ultimately, we're about to head into the trading weekend where anything can happen. But ultimately, I'm much more interested to see how this banking crisis unfolds, because the long-term effects and maybe the flight to Bitcoin, I think, is the single most interesting thing about any of this. And as well, I'm still trading this. I'm still in my trades. Somebody actually asked me, how long will I keep these trades open? I'm a moon boy. I'm going to keep these trades open till, $1 billion or nothing, or $1 million or nothing. But currently I'm up roughly, again, a little under 20,000 USD in these trades. If you're interested in signing up and getting massive deposit bonuses and sign-up bonuses, you can use the links in the description. If you use the link specifically in the description, you can get up to over 50,000 USD in deposit bonuses between the three exchanges. And as well, 0 fees for spot trading, which is absolutely, it's game-changing. Why pay fees for spot trading when you don't have to? Without any further ado, that's it for me.